Here are considerations that high-income professionals need to understand when applying for credit or loans and the complexity that is involved. Hey, this is Justin Hitt with Sustainable Wealth Secrets. As you develop your portfolio of assets, which may include property, homes or real estate, it may include investments, it may include a variety of bank accounts and different types of engagements, you must understand the challenge that comes with the complexity of taxes and when you're applying for loans. So let me give you an example. My tax return is between 45 and 78 pages. Okay? I don't know how big your tax return is, but if you do itemized deductions and you have a business, or itemized deductions and you have real estate, or itemized deductions and you have all three, you could be in a situation where your tax return alone is significantly complex. Now, if you're completing this tax return on your own or using TurboTax, you're going to miss out on some of the different types of credits that are available, the different types of things that need to carry over due to income. There are times where your income will disqualify you from contributing to a traditional IRA, for example. But your income could actually disqualify you from contributing to a Roth IRA as well. That's the whole context of, what they talk about in the news isn't necessarily for high-income professionals, because a Roth IRA is not the best investment for you if you have a high income, and neither is a traditional IRA, but both of them will have tax consequences because you may be in a high tax bracket in retirement as well. But my larger point is that when you apply for a loan and they ask for the last 3 years in taxes, that could be 120 pages in taxes. And it very often is confusing. And it's a lot of information that you don't need to provide to get a loan. In fact, it is a privacy risk, and this is the number one concern you need to worry about. If you've got a tax return that's more than 20 pages, you've got something worth stealing. And you don't necessarily want that information floating around, especially your social security number, your name, and your date of birth. Those three things together, somebody can open credit in your name. It's hard to keep wealth if you keep getting embezzlement and you keep getting identity theft and you keep getting other issues. Now, I have, in my own personal experience, about twice a year, somebody nails me with identity theft issues. Now, these people probably are not stalking me out. They probably bought a database somewhere and they just, they found the combination that worked. But again, all this data is readily available. If they have your actual tax return in a PDF file, they can actually file for a larger loan than they could with simple credit card theft. Most of the stuff I've got is normal credit card theft that you're going to see all the time. I had one time somebody open insurance in my name, and another time somebody had tried to do a car loan. But in both of those cases, a bank notified me something was going on. But here's the deal. When you file for a mortgage, for example, and it's an investment property, and they're asking for the last 3 years in tax returns, that could be 120 pages of details that you do not want to share. And in fact, I just checked my facts here. I sent 178 pages is my 3 years tax return. Now, of course, that's state and federal, and that's all that's the primary documents to go with it. Now, what can you do instead? Well, I've actually gotten loans with a letter from my CPA. So the CPA sent over what's called a tax summary, and it comes right out of their tax system, and it's basically the last 3 years on a single page. Now, if a bank asks for more information, you can give them details about what they're asking for, but it's not necessary in most cases to give them the full context of your financial portfolio. You can actually apply for a loan matching. So, for example, if you have a real estate investment company, the real estate investment company can apply for the loan with the bank account of the real estate investment company, the assets of the real estate investment company, and the liabilities of that company. Now, that can be the separate loan. Now, they might ask for your personal details. You can give them a high level of your personal details. But as long as you are sure that you can cover the loan and you're presenting accurate information, like you haven't overscheduled the bank account, you haven't you keep your money separate like you should in a business. These things are going to reduce the amount of paperwork you have floating around. Because I'll tell you, a lot of these people say, oh, we have a secure fax. Well, you send it to their secure fax. The fax machine turns it to a PDF file and emails it to them. I've been working with mortgage companies here and there, and the mortgage company will say, oh, just email me these documents. And I'm thinking, well, this document contains my social security number, contains my name and my birth date. I am not sending it over. And they will say, well, we don't have a secure system. And I'll be like, well, I'm not going to do business with your bank. The key to understand those, this is your responsibility. Privacy is your responsibility. And you might be saying, well, Justin, I don't have anything to hide. All I have is a high income and a vacation rental. Well, you've got to realize the person who's receiving this is a $38,000 to $40,000 a year, maybe $50,000 a year clerk who's going to receive your document and say, oh my gosh, these people make $300,000 a year. They have a vacation rental. Oh my gosh, they have all this extra income. Well, I don't think I have to. You lose all your power to negotiate fees. Now, you do need to demonstrate your ability to pay off the loan, and you need to make sure it's accurate. But you do that through your CPA. Your CPA will help you structure. Now, there will be cases like you can't avoid sending the actual tax returns. So I'm doing a farm loan right here. I'm working with a smaller organization. I'm actually going to be a member of this smaller organization. And so they want to see every detail so that they can not only feel comfortable about the membership, because I'll get dividends from this investment. I guess it's more like a credit union. But they also want to be sure that, because we're talking about a much larger amount of money than the amount of money that we're getting on this first loan. So let's say you're doing a longer term relationship and you're going to have, for example, a loan to buy house A, and then you're going to buy house B, and then you're going to buy house C, and you're going to buy house D, and you want a big open line of credit, or you want a revolving mortgage type situation, or a jumbo loan, you might have to provide the full details. But for a simple home refinance, these summary documents work great, but they only work because they came from your CPA. Okay, so your CPA provides authoritative documents stating your financial situation. Now, it is a good value add to work with your CPA to make sure you don't overextend yourself when it comes to borrowing money, to make sure that the property models for cash flow. Oh, I know you didn't think about that, but before you buy something, you should figure out how to cash flow it. But ultimately, to make sure these models are relevant for the case. Like, so for example, I used to do 85% rental rate. Well, now I model 70% rental rate, because during the COVID, there's actually the forbearance issue. During COVID, you can't just evict a tenant. During COVID, there's a bunch more restrictions. So even though property values were going down in the beginning, now property values are going up because a lot of people understand that they can buy a house and they don't have to make the mortgage, and they can't get kicked out for a couple of years. There's a lot of people who are renting properties and deciding not to pay the rent or the utilities, knowing they cannot get kicked out in certain states. So if you are doing a cash flow analysis prior to getting your loan, you're going to need all the details. So you go ahead and gather those up front. You store them in a secure location. You keep copies for that project or that activity you're doing, but you're going to run a cash flow analysis. Now, if you run that cash flow analysis with your CPA or with an accountant, you can actually take that to the bank and say, look, I'm thinking about buying this investment property. Here's my cash flow analysis. Can I get your feedback? You're almost involving the bank in it, and then they can suggest different kinds of financing. So in the case of buying a farm, the farm is being purchased in a specific type of zoning. The farm is being purchased under a certain type of business. The farm is being purchased with mindfulness of some FDA and some USDA type of programs that have just come out. There's all these things that go in before you send the information to the bank. So you might send what's called a preliminary. So they're going to create a letter of credit for you. So you send them a preliminary application. And it comes with the basic evidence, maybe your W-2, maybe first page or the first 2 pages of your tax return that summarizes all your federal tax return. Give them the minimal amount of information to get what you need. If you give them too much information, there can be other problems. So one mortgage company we were closing with, I gave them a little bit too much information, and they noticed that my direct deposit from my paycheck was going into 3 different bank accounts. And they only saw one bank account, and which is my personal bank account, and then the accounts that I identified as investment accounts that would support the loan could be repaid. And they saw the transfer. They said, well, where's the money? Where's the other money going for your paycheck? Now, my question to them was, the amount that is deposited into this account, is that sufficient to cover the loan? Because I don't want to give them additional information. I don't want to give them other stuff. Well, it turned out I'm refinancing an investment property. I had to give them all the information for my personal residence. And then here's a third reason why you want to give them minimal information. They ended up mixing up the 2 sets of information, the mortgage details for my personal residence and the mortgage details for the rental property, which was being refinanced. And ultimately, now the refinance company's name is on my home mortgage insurance. So actually, I don't have mortgage insurance. It's like the home insurance. So basically, they mixed everything all up. And they mixed it up in a way that's going to cost me money to fix. So again, I gave them too much information. They needed to see the W-2 because I'm actually personally guaranteeing the rental property. They want to know where's your income coming from. But again, you got to check on every little detail. So when I found out the insurance for my home, my personal residence, has the name of the mortgage company I'm trying to refinance with for a rental property, I had them stop everything. I said, hold up, wait a minute, something ain't right. And I had to go back and work with them step by step to clear up information. So you don't want to give them too much because it can cause them to want details. So the loan originators may want additional details that confuse the situation. And you also don't want a lot of information moving back and forth for privacy reasons. And again, you want to reduce the confusion because you don't want the title or name of one company showing up on a different property. You will want to keep each asset clean. Each asset must pay for itself. These are some of the rules of sustainable wealth. Each asset needs to be clean, and that means the insurance, the property, the mortgage, and the titles and taxes and all that stuff is separate. Because at the end of the year, those complex tax returns take quite a bit of time to produce. 3 years of tax returns, 178 pages. It gives me about an average of 60 pages per year. That's about 20 hours of work. The CPA is doing a lot of that work, and they have systems to pull that data in. I'm doing that work throughout the year. My bookkeeper's doing that work throughout the year, and I'm not even sitting on a huge fortune. If you are making $200,000 a year, $300,000 a year, or more, which many of our subscribers do, especially if you're running a business, especially if you've got rental properties or real estate investments, it's very important how your books are put together. And again, how that information is circulated as you're refinancing loans, as you're working out lines of credit, as you're investing in organizations. When you bought that membership in an LLC, are you being taxed as a partner? Are you being taxed as a shareholder? Or are you being taxed as an employee of the organization? All of this matters. It all comes together through the professional help, your legal help, your CPA, and it all together builds that wealth. In fact, you may get yourself in a situation where you've got multiple investments. So I know a lot of folks, they say I can afford $1 million property, and they go live in $1 million property. Well, I'd rather see you, if you want to build wealth, afford $1 million property, but live in a $100,000 property and have $500,000 properties around town that generate income for you. Because when you do these types of things, even though you have the complexity of the tax return, even though you have these challenges every time you're refinancing something, or you're extending your opportunities, you also have that multiple appreciation and that stacking of wealth that gives you stability. If you've got questions about this or anything else we cover at Sustainable Wealth Secrets, I'm Justin Hitt with Sustainable Wealth Secrets at www.sustainablewealthsecrets.com. I don't know how many times I can say that, but the most important thing is don't let your documents circulate. This is critical because it doesn't take much for someone to come along and open up a line of credit in your name, set up a mortgage in your name, to buy a property in your name, and then default on it, and you get stuck holding the bag. This does happen. If you have specific questions, talk to your CPA, contact their offices, and stay tuned for the next episode of Sustainable Wealth Secrets.